Welcome to today's webinar. I am really excited to be talking about this topic, and I will say a month ago, back in December, I was at a DCPA 10 conference that the AICPA put on. In this topic, as we talked about, a big part of the theme was how do you take client advisory services to the next level, virtual CFO, becoming the trusted advisor, and a lot of it really dealt with these CFO kind of services. We have a lot to go through today. And I will tell you, we'll talk a little bit more at the end of this, but we have an entire course that talks about how do you start a CFO practice. And so we're going to give you a little bit of a flavor of the whole thing and think there's some really good content in here, but knowing that if we leave you wanting more, there is a source where you can get that additional information. So tell you a little bit about me and then the administrative parts of the course. My name is Tom Wadelton. I am one of the full-time virtual CFOs here at Summit CPA Group. Worked in Fortune 500 company before coming to Summit 4 years ago, have my own group of clients that I manage and do the virtual CFO services for them. I've also been very active in the Indiana CPA Society and now with the AICPA. So for today's webinar, we have one CPE credit offer for the session. You do have to attend the entire 50-minute session. We will have 3 polling questions, the first one coming up here in a couple minutes. If you meet those criteria, then you'll get the CPE certificate and also the slides that we have for here. I do want to emphasize we have the question function. You don't have the ability to talk during the webinar, so that's the way that we can communicate with you, and we do watch that really carefully, and we'll do our best to answer all the questions, and that really tries to make it as interactive as we can. So as you hear something and have questions about it or comments or things like that, please do that, and we'll be watching those and make sure that we get those interjected. And again, we'll go ahead and send out the information. Okay, so a little bit about Summit and our speakers. First, Jody Grunden. Jody is our co-founder, started the company in 2002 and is our CEO. He has done the virtual CFO role and pretty much all the roles inside the company. So he's gonna be one of our speakers today. And then also Jamie now is our director of accounting. Jamie also has a lot of experience and has been full-time virtual CFO and then now leads our entire accounting practice and really spends a lot of time coaching and developing our CFOs in the practice. So our firm, I mentioned, we started in 2002. We have been offering CFO and back office services since 2004. Started going virtual in 2013 and finished that to where we were a fully distributed firm in 2014. Lots of flexibility with where employees and clients are. And now we have more than 150 virtual CFO clients. Just this year, that average is about $60,000 per year for clients. Closing rate, as you can see, for 40%, we've grown $1.8 million. I think it really speaks to what the need is of clients having this. So I'm glad people are participating because there's definitely a need that people want this kind of advisory CFO type services. And we provide that with more than 55 employees across the world. We also have 15 contractors. Most of our employees are in the US, but we do have some outside the US. Okay, so learning objectives for today. We really do think you'll get a better understanding of the role that the virtual CFO plays. How would you present these services to a prospective client? What does profit-focused accounting mean? Clarity around why you should define your niche. And then also, what's a proven successful VCFO client model? Meetings, agenda, cadence. So we really think that you can leave saying, I understand what the role is, how would I present it to someone, and then also how would I actually deliver these kinds of services to people? What we're going to cover today then is the role of the virtual CFO. That's what we're going to go through first. Hoping to get a good understanding of that, and we'll talk about how would you get started doing this, how would you think about putting this whole thing together, and then finally, how do you deliver those services? So with that, I'm going to go ahead and kick it over to Jamie, who's going to talk about what is the role of the virtual CFO.
Awesome. And before I go down that road, I want to talk for a second here about the question that came up in the question log, because Deborah came in and said that she loved it, and I want to make sure Jody knows that she loved the music, not his introduction, because he was talking earlier about how the audience always loves him. So I want to make sure that he knows that question came in during the song, not when they're introducing him. So.
And Jamie, I'll let people look at your slide for a second, and then I am going to go ahead and launch the first poll question while you cover the material.
Okay, perfect. Yeah, so the first part that we're going to discuss here is the role of the virtual CFO, and I think this is a complicated area, but also area that really helps you out, because everybody has a different picture of what a CFO looks like. Anybody that's worked in industry or has worked in a different company, CFO means different things to a lot of different people. And so what I'd like to talk about is kind of how to use that for your advantage. And so what we like to do here at Summit CPA is my vision of a CFO. And when I train CFOs, what I talk about is, I worked for a large company. Actually, I worked for a couple of large companies. And anytime I saw the CEO walking down the hallway or eating lunch, the CFO was always there, right next to him or her, sitting there, talking questions, answering questions, talking about the business, understanding the business. And to me, that is what a virtual CFO is, and that is what a CFO should be. And that's how we advertise to our customers and how we advertise to how we promote within our firm. Is we want to make sure that you are the right-hand person for the CEO. And that's key, because anybody that knows a small business knows that what a lot of them are missing is that person they can ask questions to, especially financial questions. When we're talking about financial questions within a company, those having someone to ask those questions to is a role that is desperately needed out there. And so if that's what you hang on your business and say, hey, that's what we do, a lot of people are going to come to you just curious about how that works. And so we have a couple of different words we use here on our slide when it gets back to that. But the first one is a consultant, a coach, and an advisor. And that's exactly what I'm talking there, is we can be all three of those things to the CEO or to the business owner. We can consult them when they have questions. If they want to understand, should I hire a person? Should we go down this different line of business? We could answer those questions using a financial lens because we have that experience. Same thing comes for a coach. If you are a good CFO and you work for a large company like Summit or another, even your company, and you have several different firms you're offering this for, you've seen a lot of things. And so even if it's not financial, you see a lot of things that happen out there, and you're able to address that and say, oh, that's a great idea. I've seen a couple companies do that, and this is how they approached it, and this is how it worked for them, and this is how it didn't work for them. So you have that experience because you have the ability to work with a lot of different companies. And so that's the first bullet point there. The second bullet point is evergreen over expiration. This is something we talk about in our business model a lot, is we want to make sure we're a recurring revenue model. We don't want to just come in, clean up the company's financial statements and leave. That is not what a virtual CFO is. We want to be a long-term partner. We want to be there in the long run. So that way, when our clients have questions and as their business grows, they're going to have more questions. And they know that right now, they're a $1 million company. They might have questions A, B, and C, but 2 years from now, they're going to be a $2 million company or a $3 million company, and those questions are going to change, and they want someone there that can answer those questions for them. So you want to have that relationship with their company, with their owners, that you're always there for them in the long run. And profit focused accounting, we're going to touch on the next slide, so I'm not going to read that here. So what we promote in our program, as well as with our firm, is what we call profit-focused accounting. Obviously, profit is really important for most companies, for all companies, in order to have long growth. So how we define this, and this is the one slide that I'm required to read. So I'm going to read through it. I will break it up with some examples, but I want to make sure everybody understands what this definition here is, because this is one that we definitely are promoting today. So profit-focused accounting is a system designed to help a client accomplish their financial goals by breaking down their revenue into non-financial drivers. So first, I just want to talk a little bit about non-financial drivers here for a second. Everybody understands what drives their business. Whether they understand the financials or not, people understand what it takes to make their business successful. And so what we want to do as CFOs is tie that to the success of their business. If you're working in a service company, if you're working with agencies like we work with, a lot of times that's people, it's hours. If you're working in a manufacturing company, a lot of times that is, how much product can you deliver? How much product can you create? And so we want to look at non-financial drivers in order to really understand how that business moves forward. Unlike revenue numbers, non-financial drivers can be consistently controlled and monitored through clear metrics that are used to determine a client's revenue forecast. So again, you want to make sure that these non-financial drivers tie directly to their revenue and to how they make money. Finally, the amount of expected revenue in the client's pipeline is used to inform and adjust the forecast. We talk about this later on when we talk about the pipeline, but a forecast is great, but if you don't tie it to real-time data, then it's worthless, right? I can be sitting here saying we're going to have a company that creates VHS tapes. VHS tapes back in the 80s were really popular, and there's a lot of demand for that. But if we're making a company right now that has VHS tapes, I could say I could produce 1,000 VHS tapes a day, but it's not going to do anything because no one's going to buy it. There's no demand for it. So you want to make sure you're tying it back to what the actual market looks like, and that's where we use the pipeline. And so we could say, awesome, you have 1,000 hours you can produce, and look at all these projects you have in the pipeline. Look at all this work you can do. You definitely need those 1,000 hours. And so you want to make sure you are tying it to real-time data.
Good. Yeah, Jody's crushed that he's learning his VHS tape collection is not valuable.
So finally, there's really 4 main facets of a client's finances that we go through with our clients and that we talk through. So the first is cash flow. Now we'll talk about this a little later as well, but when we talk about cash flow, we talk about it in 2 lenses. One is short term, which is what a lot of companies don't think about. They don't think about how's my cash going to look over the next 2 weeks? How's my cash going to look in 3 weeks, 4 weeks? Am I going to be able to make payroll? Which vendors should I pay? Who do I need to collect from? And so we make sure that we talk about cash flow in the short term, but we also talk about it in the long term. So when we're building a forecast, we're building a balance sheet forecast. If you can say, hey, if we hit these numbers over the next 6 months, your cash is going to grow from 200,000 to 800,000. It really gives them that carrot to say, hey, there's a reason to follow these goals. There's a reason to really try to do what we're doing here because it's going to result in cash. And so we not only look at cash short term, but we look at it long term with our clients. Talked a lot about forecast. When it comes to a forecast, it's really just building them a plan and not just a budget. A lot of companies talk budget. You know, you go into the year, you build your budget and you say, okay, this is what 2022 is going to look like. But on January 6th in 2022, the market could totally change. You can have a brand new client that comes in that's bringing you 3 times as much revenue that you never expected. That's going to change your plan. And so you don't want to look off that old budget, that old plan. You want to make sure you're updating that for that new customer that came in. Maybe the market changed. Maybe a pandemic's happened. So you want to make sure you're not going off that pre-pandemic budget and you're still relying on those numbers. A forecast should be updated at least monthly and looking at it and making sure that you're talking about what does the market look like now? What does our industry look like now? What should our financial statements look like to adapt to what's happening out there? Pipeline.
Danny, I think you mentioned 2 things that just show the amount of value that someone who's good at forecasting can do. The balance sheet and then the ongoing updating.
Yep.
It's pretty simple to do a sort of Excel income statement, rough budget, and a lot of people can do that. When you start saying about how's the balance sheet look and can you do that, it gets more complicated. And many people can do sort of, hey, here's my year budget. Next year I'm going to be X big. When it starts changing though, keeping that, maintaining, having a cadence can be really challenging. And that's a place where I think people can bring a huge amount of value by saying, I know how to do this. I'll keep you on task. And when things change, like your example, we'll reflect it and see what happens with that.
Yeah, no, I definitely agree with that, both of those points. And I think the second one, oftentimes I've been in a sales call and I've been asked the question, okay, what is the key thing Summit brings? And to me, one of the things we bring is just consistency. Again, I think a lot of business owners, a lot of people can easily create a budget, but they're going to create it once. They may look at it every 6 months, but they aren't. If someone's not focused on it, if someone's not requiring you to do it, they're not going to be looking at it every month and updating it. Where if you have someone doing that from the outside and say, hey, we're gonna build you a forecast, we're going to have this conversation with you once a month, that's worth its weight in gold because we're just going to be there reminding you, and it's a meeting you're not going to want to miss because it's going to understand the long-term forecast of your business. And so that's a lot of times what a virtual CFO provides is just that financial consistency.
Yeah, and when they have that question, like, is it time to hire a person? You've got something updated. You can say, well, let's plug it in and see what that looks like. And you can actually decide not to do it because it doesn't make sense, or do it having a lot of confidence that, yep, this is the right decision to do.
For sure. And that's where the next 2 come in as well. I think a lot of the big things with both of these is consistency. I think you have a lot of sales and marketing teams that look at the pipeline, but they look at it either at a very micro level. They're always looking in the details. They're really worried about that level, but they're not looking at it just taking a step back and being like, hey, what does this mean for the business? And so having someone do that with you once a month is really important. And same goes for financials. I was shocked when I came into this industry how many people, how very rarely people look at their financials when they're a small business. Like, they understand the money coming in, they understand how their cash is growing, but they don't take time to look at the financials and say, what actually happened last month? And how can we make that happen again? Or how can we make sure that doesn't happen again? So a lot of companies know where their numbers are at, but they don't take a step back and look at those financials monthly. And that's what a virtual CFO could do for a company. And so again, the big thing with all 4 of these is just consistency. And if you're willing to provide that to a company, they're going to pay you for it.
Yeah. So good description of the role of the VCFO and then the services that we play in that. Jody, you want to talk a little bit about how we get started doing this?
For sure. And Pretty excited. This is probably the most exciting. Can you flip to the next slide there for me, Tom?
Yep.
Super excited about sharing this with you because it was basically trial and error since 2004. We made a ton of mistakes as we went along, and it really wasn't until probably 2011, so 7, 8 years later, that we really figure out what people wanted, what was profitable. Because again, we were providing a service that we weren't pricing it, right, and we weren't being profitable, and it was just one of those things we had to figure it out. The basic thing is that we went through a lot of trial and error in order to get to where we're at. So we're hoping that you can take a little bit of these nuggets that we're going to give you and really help you expand on your service there and your package there. But the first thing that you have to do is you have to identify what clients that you want to approach and in what niche that you want to approach them in. So you identify the client. For us, we say that, hey, we want a client that's at least $1 million in revenue, which is equate to about 10 to 15 employees, mostly service-based companies. We don't deal with a lot of manufacturing companies, but maybe manufacturing is your niche, and that's great. With that, that's the consistency of base of our client base. We've got about 150 clients roughly in that service-based niche area. We focus even smaller into a niche. We focus into the creative agency space, which we've got about half our clients or so that are in that space. But I would say the majority of our clients are service-based, at least $1 million in revenue. Our average client is between $3 to $5 million, and we offer 3 levels of services, and I'll talk about that in a second. But it's important, first of all, to identify the client that you enjoy working with. Is it a specific niche that you like to work with? Is it a specific type of client? So that's the biggest thing. Identify the client. Frequency is also important because with our services, we offer 3 different services to our clients. The first service is what we call the transactional or more traditional service, which is just simply going over financial statement, going over what went right, what went wrong, kind of talking more about the past. We get about 10% of our clients want that service, so not too many people. Typically, when they come to Summit CPA Group, they're not coming for traditional financial statement service. First of all, it's boring, nobody understands it, and it doesn't really help them a ton going forward. What they do come to us for is that forecasting service, the frequency service. And we offer 2 levels of services there. We call one controller, one CFO. You can call it gold, black. It doesn't make a difference what you name it. But the frequency is really important. For the middle service, we call it the controller service. That's meeting with the client 1 to 2 times a month. And with that, we're talking about the forecast, or we're talking about the financial statements for a small portion of that time, maybe 15 minutes, but the biggest portion of the time we're talking about how did those financials impact our forecast? Were we planning on having cash flow troubles in November? Now it bumped up to October because we had a really, really bad month. Or, hey, did we correct ourselves and now we don't have the cash flow issues in October? Maybe it pushed it to November, December. Maybe it got rid of it altogether. So that's the biggest part of it, the frequency there. And we talk, again, probably 1 to 2 times a month. The CFO service, we talk about basically 4 times a month, 4 to 6 times. So we're meeting with the client on a weekly basis with our CFO service. And it's more of a strategic service because we're really in depth in the weeds more with the client. We're usually meeting with their leadership team, and it's never the Summit CPA show. It's always we're part of their team and offering the financial part of the discussion when it comes our turn, because there might be production in there might be marketing in there, the COO, CEO, whatever might be in the meeting there. We have to make sure that we're gearing that meeting towards that. So we're defining the frequency between the different levels. Again, the transactional level, real quick, one time a month, just going over historical stuff. The controller, 1 to 2 times a month, touching on the historical stuff, but really focusing on the future. And then the CFO, which is more of our unlimited service. And with that, we're going forward and we're meeting with them on a weekly basis. And it's kind of an all-encompassing thing. So once you've identified the frequency, the scope is really important. You have to identify the scope, what's included in your service, and more so what's not included in your service. So when we talk about putting together a statement of work, we want to make sure that we identify not only during the sales call, but also in your statement of work, what you're going to do and what you're not going to do. Very, very important. Because again, not everybody on the other end is an accountant. They may not understand accountant, that type of thing. And so you want to make sure that you really break it down and say, yeah, we don't do payroll processing, but we'll recommend ADP, Gusto, something like that. We don't do, we don't do payroll, we don't do accounts payable or accounts receivable or whatever the different things in there. We want to make sure we identify what we don't do, but we do X, Y, Z based on what the client wants.
So defining scope, super, super important. I'm gonna flip the next one there before we go down.
So marketing the firm?
Yeah, so marketing the firm. So once you identified your different what you're actually going to provide to the client, it's really important to really focus that in on your marketing program. Now, we've always believed in what we call brand level clients, not partner level clients. Partner level clients is basically the traditional CPA firm model, where partners go out and they're required to bring in clients. They go to all these different events and so forth. And we really shy away from that. We want to create a brand to attract clients to us. And it takes a little time to do that, but marketing is really a key part of that. We spend about 7% of our annualized revenue in marketing, which for a lot of you, that would probably make you cringe a little bit there. But what it does, it drives clients to us. And with that, it allows us to close on average, but between 3 to 4 clients a month. And our average client is between $60,000 and $70,000 a client. So again, it's a pretty nice model where we're not doing any outbound marketing. Everything's really inbound marketing, which is super, super important to this whole process. And in order to
Jody, sorry to interrupt. I'm sure you would also say that our very high close percent has a lot to do with the inbound marketing, right? As people come to us, they're wanting these services. That's a very different than cold call outbound kind of stuff.
100%. So we close our closing ratio is roughly 40%. I think in 2020 it was like around 44-45%. This year, actually last year it ended up being around 40 to 41%, somewhere in there. And again, the average order size is going to vary between $60,000 to $70,000 in that ballpark there. And again, it's all based on the fact that we position ourselves to offer a virtual CFO package, and we've got the package lined out. But in reality, though, the narrow that you can define your niche, because that's again the biggest thing that we did probably in 2011. I think so we really started focusing to a niche. Prior to that, we were picking up about 1 to 4 clients a year, and we were high-fiving each other at that point. Now again, we're picking up 4 clients plus a month, and with that, it really focuses around the niche that we market it towards. Now, when I say marketing towards a niche, that doesn't mean you can't do everything, because you can do all different kinds of services, especially when you understand how companies work. But our marketing efforts are geared towards that niche, and it's really driving clients to us. And so what does a niche allow us to do? A niche allows us to create that demand, which is really important. And it's going to reduce really any kind of that outbound marketing expense. Again, inbound is where we're looking for. With that, you can charge actually more money for that niche. It's very common that we will talk to clients and they'll say, yeah, our current account, because we always ask them, what are you currently charging for your service, or what are you currently paying your accountant? And they'll say $10,000, $15,000, $20,000, something like that. And then we'll put our proposal up there. Our proposal, it's like $60,000, $70,000, $80,000, and they're like, oh, it's not too bad. And my accountant's doing this, but you guys know our industry. You guys know how to do this. This is what you guys do. And with that, it's very common that clients will make that switch, and whether paying a fourth of what they would charge, what we charge for that service there. And it all comes to, again, that niche and that knowledge, and again, the focus on it. And I think that's super, super important, because everybody on this call could probably do exactly what we do and could offer that service exactly the same way. The difference is that that's what we do. So we offer that service. This is what we do. We're very good at it, and that's what attracts people to it. And that's what you want to accomplish within your agency, is really becoming that leader, that niche, because you can charge again more for that service, because you know the service, know exactly how it was. The other thing is you can be very selective on people coming in, calls coming in. It's really often we get bombarded with a lot of different inbound leads that people will hop on and say, hey, we're a manufacturing company, non-for-profit, whatever that might be, which we don't do. And it's great. You can actually turn those clients down or push them to somebody that actually does do that service. So you can be really selective on a right fit. And because it's really important, because we have between a 92 and a 94% retention rate on our clients, on our CFO clients. And again, that's real. The important part of it is when you're in the marketing, you're really drawing the exact type of client that you want to work with. And again, super, super important to be very selective on who you want to bring in and who you want to do it. And with the growth that we've experienced has been pretty phenomenal. I don't think we've had a year since probably 2010 that we didn't have at least a 30-35% growth, and a lot of times it's been even higher than that, a lot higher than that actually. We went from, I wrote a book. That's kind of funny. I wrote a book, how to go from $500,000 to $5 million. I wrapped it up 2 years ago or a year and a half ago, and we're pushing probably $11 million this year in 2022. So the growth is just dramatic because, again, as Tom mentioned earlier, that need is there. They want somebody that can really help them get to that next level. And the pandemic showed it completely because, with that, it was really super cool that we could provide that modeling. The client, we were already meeting with clients, we already understand them, and now they're going through a crisis. We can help them and be that sounding board for them to really help them make those decisions that's going to change the career. Because again, they're responsible for many employees and many employees' families. And again, the owner has that weighted on their shoulder, and it's really nice to have that partner beside them. And that's the partner that you want to really be. You don't want to be the accounting partner. Nobody wants to be the accounting partner. You want to be that CFO, that advisor that's along with them. And the marketing is the big part of that.
And real quick on the niche side of things, it's interesting. I was at a conference a month ago, and this conversation came up where a lot of people are like, okay, how do I find this niche? And it was kind of a two-sided conversation. I think a lot of times you fall into it, right? Like I think that Jody can tell our story, or can hear our story sometime about how we fell into the digital agency world, and it was something that we just started serving and started doing it. And I think that's one side of it. But then I think the second side of it that a lot of people talked about is you have to make sure you enjoy it too. I think that's the most important side of it. If you're doing something just because there's a lot of money in it, you won't show that passion to your clients, and you won't take the passion of really understanding it. I think everybody that comes to Summit, once they see this industry, like, oh yeah, this is actually really fascinating, and I love learning about it, and I love asking questions about it, because you really have to have that passion in order to really make it work. So I think it's kind of two phases there, and I think that's one of the most common questions that come out of this is, yeah, I definitely want a vertical, I definitely want a niche, but how do I find it? So like I said, I think a lot of people fall into it, but a lot of times you fall into something that you don't love, and you got to hopefully fall into something else, or go out and seek something that you love.
Yeah. I think you're totally right, Jamie. And we got two questions that Jody already answered around sort of what's the average size of your client. And we've had some conversations with people who will have niches. And one I remember specifically is a person who worked a fair amount with a massage therapist and said, maybe that's my niche. And so we had discussions, said, well, are they an individual? And it just turned out that many of them are too small, that they have maybe $100,000 to $200,000 a year worth of revenue. And so that was a really good conversation about, if you really focus on that, can you really see yourself trying to charge someone who makes $200,000 a year total sales $50,000 or $60,000 for CFO service? And it's just, the numbers just aren't there. So there is obviously a financial and accounting piece of that also. So Joe, that probably takes us easily into the sales and pricing information.
Yeah, for sure. So once you've really kind of marketed towards that, when we say marketing, we do a lot of content marketing. So with content marketing, what we're doing is we're writing articles. I've written 2 books. We've really done a lot to really get the message out. And it's not to sell Summit CPA Group or sell Virtual CFO. We never really talk about that. We're always talking about how they can improve their bottom line, what they need to look for. It's more of an education than it is really anything else. And that's the important part of it. So you want to sell through education. People don't want to be sold. They want to be taught, and they want to learn a lot of different things. And that's the biggest part about the marketing approach that you want to take is, hey, give everything away for free. Give your knowledge for free, because it will return in spades for you for sure. When it gets down to the selling side, the beauty about our sales approach, our 6-step approach here, is that we do it within an hour. And it's kind of funny because we can close 40 to 45% of our leads, our prospects and the clients, within an hour of video conversation. So everything is done video. We don't do anything in person. So everything is done through video camera. And it's important that the client or the prospect has their video camera on, that you have your video camera on, so you can see eye contact, make sure that they understand exactly what you're talking about. And plus, you're going to share with them at the end your pricing model and kind of show them and give them the options on what they can and can't do. Because keep in mind that not everybody's going to fit in that same exact package that you put together. You want to give the client options on what they can do to kind of mold their, basically create their own adventure. Do they have an accountant that they have on staff, or a bookkeeper that they love, and they just want somebody to oversee that person and be the CFO? Or do they want to replace that person? Do they have a tax person that they've dealt with for years and they don't want to get rid of that person because they've really helped them out in a lot of great situations? Or do they want to replace that person? So again, not everybody is the same, and you want to make sure that you kind of mold that adventure and allow the client to pick and choose what works and what doesn't work for them. So with that, we have that the 6-step process. And the first process is getting that lead. So with the lead capture, all of our marketing efforts are driving clients to us. We use a product called Calendly, and we use a software called HubSpot. So HubSpot is what we actually used to design our website. That's where all of our landing pages are at. And that's what's driving the clients in there through articles that we're pushing out, and or referrals or speaking engagements that we're speaking to. Whatever that comes through. But what happens is the email comes in or the introduction comes in, and it gets followed up automatically with an invite, personalized email invite with a Calendly link where the client can actually schedule the meeting. So we have a staff, like I said, almost 70 individuals on the team, and we have one administrative person on it, one person that handles the administration. We don't even have a receptionist. So with that, the big thing is to bring those clients through where we can capture them through an email. So once they've scheduled the appointment, and it's kind of funny because last night, for instance, I was eating dinner at a restaurant. I got a little ding, and it's like, well, someone scheduled an appointment for me for this morning. And so I hopped on a meeting this morning with somebody, and it was a great conversation, and we'll probably pick them up for close to $100,000 or maybe even more. So it's kind of a neat process. You want to do that where it's automated, where at night when the clients are actually looking for somebody like yourself through a website or whatever, they can then schedule something right away without having to call in and go through that rat race there. A 1-hour consultation, that's all that you want with the client, so you can kind of go through that. And with our consultation, we let the client talk. So the way that when we start that conversation out, it's like, hey, you want to tell, they always ask, should I go first or should you go first? You always want to let the client go first. That's super, super important in the sales call. You let the client go first, explain what their wants and needs are. Then you can interject as you go along. You can kind of ask them all the qualifying questions that you're looking for, how big they are in revenue, how many employees they have, what are they looking for, looking to replace. They'll tell you their story, and they'll tell you why they're reaching out to you. And so once you've actually got to know the client, really develop that rapport, and kind of adding in a little flavor here and there, that's when you actually pop up your quoting software, your quoting sheet that you should have pre-made, ready to go, with your itemized list of things that you can and can't do, or won't do, and you'll actually present that to the client and let them pick their own adventure. Do they want the virtual CFO service where they're meeting once a month or on a weekly basis? You should pretty much know that by that conversation of how big the client is and what how much touch and what kind of touch that client wants from you. That you should also know during that conversation about the tax services, about the accounting services. And then you want to deliver different scenarios for the client during that 1-hour meeting on what you can and can't do. The important part about that meeting is you want to make sure that by the end of that meeting, the client has a firm number on how much your service is going to cost. And with ours, we recommend charging your service on a weekly basis, not a monthly, not by hour, but on a weekly basis. And make sure that is a flat fee dollar amount. And that's really the key to our service. So again, we developed what we call a subscription-based model back in 2004, actually. And with that, when we determine the overall cost of the service for the year, we divide it by 52, and that's your weekly fee. We automatically zap their account every Monday. We don't have an accounts receivable, which is pretty cool. $9 million in revenue, no accounts receivable, love it. The conversation is never about the CFO conversation is never about the bill. You don't have to worry about that because it automatically comes out. And the clients just love the fact that they don't have to worry about cutting checks to you or finding out, what's not included in the service, and all of a sudden they get this big bill. They don't like the surprises. They like to know exactly what's up. We've had zero pushback since we actually enrolled the program. All of our clients are on it, and that's just kind of how we do it. And the clients really love it. So again, coming up with that weekly fee is super, super important. So you come up with the dollar amount that the client wants. Then the next thing you want to make sure is that you standardize your engagement letter and SOW. It shouldn't take very long. It takes us like 15 minutes to put our SOW in. They get a really cool engagement letter, statement of work, basically detailing everything that we will and will not do. And again, we push that out for electronic signature. Again, everything is electronic. We don't want to have them print anything off. We want to make it very easy for them. And then also they get a follow-up email once they've signed it there that puts their payment information in, so we can then start zapping their bank accounts out and get the engagement rolling. So once engagement accepts, the engagement begins. That's when we actually go into the next phase, which is our onboarding. But before we do that, just a few tools that we use. Again, everything we use is through Zoom. So Calendly is a big thing there. Make sure you have Calendly. It's real easy for appointment setting. I don't know how we would do it without it. OneNote is another feature that we use. I like to write everything by hand. Some people like to type. I can't type and talk at the same time. I don't know what the deal is there. But what I like to write everything by hand, and it's really cool because you can actually embed your stuff in OneNote, and it works really nice. PandaDoc is what we use for SOW and engagement letter. Super great program. It allows you to embed videos. It's really cool, and it allows you to do electronic signatures. CPA chart is what we use to automatically zap their bank accounts. And then HubSpot, again, is what we use for the overall website, website to bring clients in through the inbound marketing.
Yeah, Jody, you mentioned your meeting this morning. I'm curious, how much time have you spent after that meeting working on that particular prospect today because of this process?
I did a quick follow-up email after the meeting, did a snapshot of our engagement thing, and told them I might reach out to them later today when I get a break to send them the SOW. The SOW literally will take me 15 minutes tops. It'll probably take me longer to identify the team members that I'm going to put on the engagement than it will be actually put the SOW together. So it's a very quick process. And an important part of that is you never want to go through the presentation, then follow up with an email with your price. That's a really bad way of doing it. You want to give them the price there and then follow up the SOW as soon as you can. Don't wait a day, 2 days, 3 days. The further you wait, the less of the chance of you're going to close that deal. Follow up the same day. SOW, the client's extremely impressed by the way that the whole flow is working right now, and it really gives them some indication of how the engagement's going to work going forward through that sales process. So it's super important to make sure that everything is basically streamlined so that you don't have to spend a ton of time. The idea is not spending a ton of time on any one of these processes to be able to accomplish the sales and pricing.
Okay, so a couple questions we had, Jody, about. One is, so what do you use for the internal workflow? You want to talk a little about HubSpot and kind of how the whole flow process works with the tools?
Yeah, internal workflow within the sales process, we use HubSpot. Right. That's pretty simple. We use their deal program. It just goes through the deals where everybody on the team can see where everything is standing. Tracks the email conversations that you've got back and forth with the client. So again, if I were to step out for a week, maybe I get sick or whatever, Jamie could pop in and basically take over that conversation because everything's documented there. It's very easy from the follow up. So HubSpot's what we use for that internal workflow in the sales and marketing pipeline for sure. Okay. Engagement letters, we do send out engagement letters every year. So we let them know that every March we're going to change, your price is going to go up. And it's going to go up around 3, 4, 5%. Really based on what the market is bears for our team. And we tell them that right in the meeting. Everybody's perfectly fine with that. But then the key is you have to really follow up with that. Make sure you do it. So in November we look at everybody's numbers. We get together as a director team. We look at everybody's numbers, where they're at. Because we do 2 different things. We price based on revenue and we price based on employee count. So that way, a client that's maybe $1 million client's not getting charged the same thing a $10 million client would be getting charged. And the reason is there's a lot more involvement with a 10 million than a 1 million, that type of thing. So we found revenue as a big thing. For your industry, maybe it's not revenue, maybe it's something different. For service-based industries, that's what we kind of found that works best for us. So you've got to identify that revenue thing. And also, if we're going to be paying bills and things, the number of employees was a big count. If we're doing payroll, the number of employees was a big count. So that's why employees and revenue are 2 big things. We look at that every year and we say, hey, based on this, they went from $1 million company to $1.5 million company, boom, here it is. 15 employees to 20, there it is. And then basically we create the price there. Now, if anytime during the year they change the scope, let's say that we initially started whether we're not doing their bill pay or paying their bills, but they decide, hey, we want that, the CFO will then automatically go into our pricing calculator, change that number, and then the new price is effective, immediately upon that thing. And so you want to have that flexibility with your program so that they're not set in stone. They're not deciding today what they're going to do forever. They're deciding today what they're going to do today. Tomorrow they can change their mind and do something a little different. Your pricing structure should be able to reflect that.
Perfect. So let's go ahead and move on to people then. So you've heard about the role of the VCFO, you've heard about the processes, and in many cases, you really are looking for that needle in the haystack. You're looking for the person who's great, work with the clients, can do the forecasting, can do the accounting, all those things. So 3 really important parts of this, and I'll tell you the 3, and then I'm going to go ahead and launch the next polling question. So get in place a hiring process. What's the onboarding for success of a new employee or an employee coming in, and how do you retain people coming in? So I'm going to go ahead and launch this poll question and continue. So the hiring process is really important to make sure it's a good experience for the candidate, but also to make sure it's a smooth internal process that you have controlled. Jody talked about a really good sales process. we've invested a fair amount in the hiring process. It doesn't have to be overly complicated, but to make sure that you know how do people come into the system, how do you track them well, and then how do you follow up them quickly and evaluate them. We happen to use a software tool named Breezy currently where we can collect the resumes. It's where after an interview, people can put the comments, they can make recommendations. We don't have to have lots of meetings to sit down and say, hey, what do we think about this person? Should we pass on to the next step? That's what the evaluation, the workflow, the process that we have within Breezy helps us take care of. And so that really does make it a pretty efficient process. And I know for many small companies, this is a huge deal, just let me get a job description out. And I have clients that it's been 2 months where they continue talking about, we're just going to get a job description. And it really points to they just don't have a good hiring process. And they're not sure how to do when it comes to the interviewing and everything else. Okay, so for onboarding, a little bit about what we do. We think this is a really important part of someone coming in and getting up to speed and learning clients and the tools and the company's processes and everything that we have. So we have a schedule that we try to bring people up slowly on clients, as many people would do. A couple things that we do though is every 2 weeks, we do a check-in. So it's a brief review with the individual employee and the people that they're working with. It's a chance for them to give us feedback on how they think it's going and for us to give them feedback. We use a pretty simple start, stop, and continue model. And so we would like to say anyone who's struggling, they find out very early on that we need some changes in their performance. And that's something that we will work with them to help them improve, but we do not want them to go through a 3-month time period and have us feeling like maybe it's not a fit and them not be aware and have been given a chance to try to improve. And the same thing, they can be giving us feedback, whether it's our processes, whether they're getting enough time, whether the technology is not working, whatever those things are. And then finally, retaining great people. So making sure you have in place the right level of compensation, development for people, what looks like a good career, you're listening to them about clients, everything else, all of that is so important. And we're at a time now that people are calling the Great Resignation. What better time now to really be focusing on the people you have on your team and not have to go out and utilize the hiring process, maybe except for growth and things like that. So really, really important part, but as you start developing the services, getting the right people doing that, who are energized and want to deliver them is really important.
Tom, I closed the poll for you.
Yeah.
We had 86% come in, and the 2 highest answers, 35% was having the right people, and 37% was just getting started. So a very relevant slide right here. So
yeah, excellent. Thank you. Yeah, and you're right. Thanks for closing that for me. Okay, so I talked people, which included process, but let's talk a little about just having good processes in place. And I'll tell you a really quick story. And Jody, when you and I were at the VCPA conference, we were talking to someone who was really busy and had led a successful firm. I remember he said at one time he was a full-time CFO and doing the virtual CFO services. And for the first half of the conversation, I thought this guy was killing it, and I think that he is. And then he said, hey, the biggest problem that I have is I can't grow because I'm the only one in my firm that can do this. And I can't give it to anyone else because we just don't have processes in place to do it. And he really sounded stressed and sounded like he had built a successful business, but he could not grow it and he couldn't step away from it because it couldn't go without him. So I think that speaks to having these kinds of processes in place to just understand kind of why would you have them. And that's for that consistency and accuracy that when Jody or Adam or Jamie or I or anyone's talking to a prospect and we're saying, here's how we deliver service for Summit, it's really important that that's how we deliver services and that it's not if I give it to one team, it'll be done one way. And if I give it to someone else, it's done a different way. If they're going to say, here's how things work for cash flow and forecasting financial statements, so we actually deliver that. The who's important. I mean, the significant role for the accountant, the VCFO, what's the accountability for that process and who does what. The kind of things that we have, as you can imagine, things like month-end journal entries, financial statement variances, the non-financials that Jamie talked about, forecast, just what do we go through and focus on for these processes, and then having specific timing for how that's done. You can see the tool, the arrow pointing down to the toolbox. ClickUp is one of the tools that we use for that. So keeping a schedule of what is done when and make sure we're staying on top of that. As we have gotten bigger and there are more people doing these activities, people looking in something like that to know, for example, when does a financial statement need to be run for the client. Much more efficient in having a tool that no one forgets about it, but even more importantly, you don't have to sit down and have a meeting saying it's coming up next week. When it's multiple clients every single month, different days, that kind of software makes sure that kind of stuff happens. And then also where, so as I mentioned, Jetpack, Zoom, Reach, ClickUp is what we're using now. That also can be important for documenting how it's done. Many of the tools like ClickUp are great for doing quick videos. So as you can imagine, asking me to sit down and document how this is done, something I don't really want to do and someone else following my written instructions probably isn't very good. me turning on the video and just sharing my screen and saying walking through and explaining it gives someone a much better way of doing it and takes me essentially no more time to do than what I would have done anyway. So those two areas are just really important.
I think the key there is you want to make sure that everything is repeatable, meaning that if somebody were to leave the firm, somebody should be able to step right in and take over that without really missing a beat. Now, it's never perfect. The transitions are never perfect, but it should be 90%, perfect. And that's really the key there, because again, if you want to scale this, you can't be everything, and neither can you rely on that one person on your firm that maybe does a kind of a good job, but you think they've got the carnal knowledge of what everything in the past. You want to make sure that you actually can replace anybody in that firm by having good processes in place and documented well.
Yeah,
I know
think that's
one of the things I talk about a lot with CFOs is, another 80-20 rule. I know there's like hundreds of 80-20 rules out there, but one of the ones I talk about is, if we can standardize 80% of what we do, then we can be creative for the other 20%, because the last thing we want to do is create robots, right? We don't want to create robots that are just doing the same thing over and over again. We want to create 80% consistency, 80% processes. That way I can be Jamie. The way I'm going to deliver stuff is different than Jody and Tom. So I want to make sure that I'm not just like trying to do things the same way that they are, but at the same time, that I have 80% of it locked up and know what's going on. So that way, when it comes to the other 20%, I can be me and I can, deliver financials how I want to deliver them, or I could do the things in my special way that I would.
Yeah, that's an excellent point. So Jamie, why don't we go on and talk about how to deliver services? And I realize that I've taken up a lot of time talking, so we've got about 10 minutes to jump through and get to our closing.
Yes, let's just jump right to the next slide. Really, I think there's a couple areas that it's important when it comes to delivery, and I think the first one is onboarding. So onboarding to me is probably the most important time with a client. It's where you'll get the most complaints. It's where you're really feeling each other out. And so we spend a lot of time making sure our onboarding is very successful. And so obviously it's important, and the reason it's important is because first off, you're defining the path. You have to have a clear path to follow, and you want to walk into onboarding as the expert. I think that's one of the, I'm always telling my onboarding team and always telling CFOs is, the onboarding is the time for us to come in there and be like, hey, we've done this before. You guys know your business, but we know onboarding and we know financials. And so these are the steps it's going to take in order to be successful. And we define that right away. So that's super important, is to know what the path is. And the really easy way to do this is to kind of look at your process. What are we doing? What do we need to deliver, and how do we do it? The other important thing during onboarding is to manage expectations. We have a lot of conversations. We have a lot of slides that very clearly call out what the expectations are. How are we going to communicate to each other? We have a slide that talks just about that. So that way they know that if they want to get hold of me right away, that Slack's the way to do it. That if they're going to send me an email, it's going to get buried with 500 emails because I'm an accountant. I have a lot of process emails going through my inbox. So if you want to get hold of me, you have to Slack me. You want to say that in day one, as opposed to them reaching out to you via email for 3 weeks and not getting fast responses and having them complain about it. So you want to manage those expectations up front. The same goes for the contract. I know that Jody does an awesome job selling the agreement and making sure that they know what goes into it, but I want to make sure as part of onboarding that we talk about that again. Just to be clear, this is what you guys signed up for. You signed up for virtual CFO services, you signed up for cash flow, you didn't sign up for AR and AP, so we are not going to be doing your AR and AP. And sometimes that is very good for clients, because sometimes I come back like, oh wait, I do need you to do that. That's something we didn't get clear. Then we have to update the price right then and there. Also gives us an opportunity to highlight our firm's value. And then as Tom talked about, create a scalable process. Our onboarding process, we look at it every 6 months to see what's changed. We go back and sit out and be, okay, what are the failures or what are the successes we've had in onboarding over the past 6 months, and what needs to change and what do we need to do better? And so we're always looking at that to make sure that it's a better and better process as we go. One of the keys to onboarding is a kickoff meeting. So the kickoff meeting is after Jody signs the client, after the agreement gets signed, we have all the parties come in and we just do a kickoff meeting. And this is where we get to know each other. We do introductions, they do introductions. We talk about who's doing what. We want to make sure they understand that my role as the CFO is to be forward-looking. Me as the CFO, you don't want to be asking me a question about an AR bill. That's the accountant's job, and make sure we understand what everybody's role is within the engagement, so that way questions get directed to the right place. We also explain everything I just talked about above. We're going to draw out this process for them, so that way they know what to expect. We've put a lot of work into creating a really strong onboarding process, so we want to make sure the client understands what that process is, and we have to be flexible with the process. Sometimes clients will come in and their highest priority is taking over payroll. we might just shift our process around a little bit because that might not be the first thing on our onboarding deck. But if they say, oh man, we really need to get this figured out, we haven't paid our employees for 2 weeks, okay, that's going to shift our priorities around a little bit versus setting up a chart of accounts. And so we want to make sure we're flexible in this area. And then I talked about communication. We also discussed best practices. You know, like I said, we're the experts. We know how to do an onboarding. We know how to do financials. Let's show that from the beginning and say, hey, this is what's going to work best for us. And then also establish feedback loops. We have a lot of feedback loops. We use a tool called Ask Nicely, where they get a question every week. How are we doing? Green, red, yellow. They get that every week during onboarding. So if whether onboarding takes 6 weeks, 8 weeks, or 10 weeks, they're getting that question every week. So that way they know if anything goes wrong, they can reach out to someone and they'll get a call from someone like me or a director or an owner right away to get that resolved.
Yeah, great. Why don't we talk leadership meetings? And right after I show the slide, I'll go ahead and show our final polling question.
Okay, so Jody mentioned this a little bit earlier, but you know, the big thing for us with meetings is we don't want it to be the Summit CPA show. That puts too much pressure on the team to have to be the ones that are going into every meeting and saying, okay, we're going to meet for 4 hours a month, and every one of those meetings it's only going to be us talking. So it's really important for us to be part of their meetings. You know, so what we do is we say, hey, can we get invited to your leadership meeting that you're already having, or you might already be having, and can we get invited to that and talk about a few things? The things I have listed on this slide, which you can't see right now, but you'll see when you get the handout is, you know, we make sure we name the meetings. You know, we don't want to just go into a meeting and call it the weekly financial statement meeting or weekly summit meeting. We want to make sure they know what the agenda of that meeting is. So, you know, if we're talking about financial performance, the name on that invite is financial performance. You know, if we're having a cash flow meeting, the name on that invite is cash flow meeting. And also within the invite is an agenda, so they know what we're going to be talking about. So if we're showing up to their leadership meeting and it's a 2-hour meeting and we're going to jump in for a half hour of that 2-hour meeting, we're going to jump in and we're going to talk about very specific things. The last thing someone wants is for someone just to come in and not have an agenda and not know what we're talking about. So if we're walking into the financial statement meeting, it's going to be financial statement meeting is going to be the invite. And within the body of the email, it's going to say, we're going to talk about income statement, balance sheet, highlights, and then how it affects the future forecast. You know, whatever those bullet points are is what we're really going to talk about there. And so it's important to have that within the body of the email so people know what they're coming up for. And then the last point on the slides is set a cadence. You want to make sure they know when these meetings are going to happen. So what I like to do is set a monthly email that basically says the first week of the month is always going to be the pipeline meeting. The second week of the month is always going to be the forecast meeting. The third week of the month is always going to be the financial statement meeting. So that way, when I send the invites out, it's there. I could set it for a year. I could set it for 2 years. They know the first Thursday of every month, we're going to talk about pipeline, or we're going to talk about cash flow, or whatever that is. And we want to make sure that there's consistency there and they know exactly what they're getting out of it.
Yeah, that's great. I'm going to go ahead and close this. Jody, I think I'm going to jump to you. I've skipped a couple of slides ahead, but if you would kind of give us what you think are some of the key points that we've gone through today.
I think the role of CFO we talked about, you want to be that advisor, that person that's beside them. You don't want to be the accountant. You want to be their trusted advisor, somebody that can really help them make those hard decisions. It's really easy to get started. It's kind of funny, but the key is that we coach so many CPA firms, and we'll give them the blueprints and everything, and they'll just hang on until everything's perfect. It's never going to be perfect to start. You've got to start and get your feet wet. You've got to make mistakes. That's going to happen. Don't be afraid of that. But the key is getting started through existing clients and kind of moving from there. It's a fairly simple process, but the biggest hurdle is yourself. How to deliver it? Very simple. You've got to actually set your deliverables. It doesn't have to be exactly what we're doing or even nearly what we're doing. You can have it completely different, which is pretty cool. But you've got to have that defined. You've got to have it defined so that the client understands what those deliverables are. Because again, we don't sell objects, we don't sell widgets, we sell a service. And it's really important that the client understands what they're going to get and when they're going to get it, and then to provide that service on a timely basis. And we do that by following up with customer thermometers, Ask Nicely, NPS scores all the time to make sure that we're providing the service that we told the client that we were going to provide. And it comes back extremely well. And getting that feedback from the client is so important, because again, it allows you to course correct when you're going off the rails a little bit, knowing you realize it. And clients love it because they can again get that feedback to you, and they know that you're going to act upon that feedback. So it's super important to understand what those deliverables are and make sure the client understands them all throughout that process.
Excellent, thank you. Okay, so that's the main content that we have. If you want to, and I think a lot of the people here are here today, both for CPE, but then also because you want to learn. So if you want to keep learning, I'll advertise we have the Modern CPA Success Show that Jamie hosts for us. You can find that on YouTube. Excellent chance to listen to employees, clients, people who work with some of our tools and vendors can give you information around that. We also have a pretty active CFO community on Slack. Well over 100 different CPAs from lots of different firms coming in and sharing information, asking questions. We have a pretty active marketing channel. We've got a book club. We've got just a general channel. So a great way to interact and get feedback on kind of what is going on and get questions answered from people. And then finally, if this sounded interesting to you and we got enough questions today, I would say for many people it did, we actually have a pretty intensive course called the Virtual CFO Playbook. So it really dives into a lot of detail through 15 different modules and all the different things we talked about today, but then much more, with exercises in there to help you develop that your own thing. And as Jody mentioned just a second ago, even if it's something very different than what we do, helping you think through how would you deliver services the way that you think is best. And so I encourage that's a great way to do that. That comes with a free coaching session that we have. We have a weekly meeting with lots of CPAs calling in, and we just have a discussion about how things are going, what are they doing, what are we doing. We're sharing practices around that. And then you're part of that CFO community. Plus you get the book that Jody had talked about and discounts on software tools. So lots of different options if people are serious about doing this. And I think it's just a great opportunity for people to do. So Jody, Jamie, thank you very much. Excellent conversation today. Thanks to our audience, some really good questions that we had, and we really appreciate everyone being here today.
Yep, thank you.
Thanks, guys. Take care.